everybody. Ladies and gentlemen, hello and welcome here to us at Nadex. And of course, to everybody, a very happy Halloween. My name is Philip and I will be your presenter for today's webinar. And just as usual, if you have a look at your webinar interface, you can see that small questions box. Please let me know if anything's on your mind. If you want me to explain things a little bit more thoroughly or differently, just let me know. Yeah, definitely looking forward to answering your questions. Right now, I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly, and yeah, that you can see the slides changing and hear me talking. So any feedback there would be nice. Perfect. Thank you very much, everybody. Really appreciate it. As usual, our session today is scheduled to run for about half an hour. And before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you're okay with them. Essentially, this says that trading, of course, involves risk, and that you should understand those risks and the risk associated with the instruments you're using before you're getting active in the market. As neither Trade with Position or myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the major live part of today's webinar. I will just tell you guys what I see on those charts. If you agree or don't agree, if you think there's a trade setup to be had or not, that's completely your conclusion and your decision. I can't make any trade recommendations. Very sorry about that. Please make sure you're okay with this before continuing with the webinar. And of course, we also have our risk warning, this time from Nadex, coming directly from the source. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. Okay, with the risk disclaimers out of our way, let's have a look at today's agenda. We want to approach the market from a very strategic point of view. We want to have a strategy because that strategy is what makes our trading consistent. And if we have a good strategy, we should have an edge when it comes to our trading. An edge means we should be able to win more trades than we will have as losing trades on our hands. And those potentially winnable trades or winning trades should be also bigger than the losses that occur, and those two components working together is actually our edge. Being profitable, potentially profitable more often than not, and winning bigger, and those two things together is what should give us a positive expectancy. And that is why we want to be as consistent as possible. We want to apply our same screening checklist for our trade setups, and we want only to take those very best trades. And yeah, our approach here is I want to show you those markets which I think are interesting right now and are moving. And using those charts, I want to show you what I'm looking for and why I think that the market might be more interesting than the other one. And please just keep in mind, if there are any questions, just let me know. That's what we're here for. I like those sessions to be interactive and not just me talking. But if you guys have questions, I'm more than happy to try my best at least to answer those. All right, so let's just jump over directly here to our charts. And the first market that I want to share with you guys today is Euro against the US dollar. And I would like to start my analysis on the higher time frames. Let's have a look at the weekly chart first. And on the weekly chart, we can start to see that this market has been range bound for quite some time, and now it started a major move to the upside. However, it has now just pulled back. And just looking at that chart on the weekly time frame, there are several things that are a little bit concerning for me. The first thing is every time this market went higher here during this first major leg to the upside, we got our pullbacks, as is to be expected. But those pullbacks never really touched our moving average buy zone. The buy zone is the area here with our 10 and 20 period moving averages. And what we want to get is a pullback into that zone or very close to that zone. However, we want to have consistent behavior of the market here. And if I don't get pullbacks into the zone here, and I get one here, and this one is deep, it is actually so deep that it goes not only to the 10, but also to the 20 period moving average. And it's a little bit more extended than everything that we have seen so far since this move higher here starting in March. You can see that the 10 period moving average already has started to pull back. That moving average buy zone is closing down, so I see a loss of momentum here. Kath is having some issues with the sound, so if you guys could just give me a very brief ping and let me know that you other guys can hear me well, I'd appreciate that very much. All right, we're looking good. Thank you very much, everybody. All right, so let's come back here to our chart. Move to the upside, we got a pullback. We like the pullback, but the pullback is too deep. The moving average buy zone starts to close down. Moving averages are still in the correct order. I have good momentum here in my indicators. So far, that chart, there are early warning signs on the weekly. Let's put it that way. Once we start to come down here to the daily chart with our time frames, things look quite different. Also here on the daily chart, we see this pattern that we're always looking for. Price is pushing higher, pulling back. Where does it pull back to? Into a moving average buy zone. Price is pushing higher, is pulling back, and so on. However, what we see here, price is pulling back. Sorry, Paula is thanks there, and we also just a second. The questions keep scrolling. C is asking about the lines. This is a 10 period moving average. A 20 period moving average is the blue line. The 50 is the red line. The 200 period moving average is my green line. And I'm using those moving averages to scan for good trend strength. I want to see this fanning pattern as we have it here. I only get this pattern if the markets are in a trend. The next use for my moving averages is I use them to spot potential buying locations or selling locations in a downtrend. I don't want to join an uptrend at any cost, at any price, but I want to get a good deal. And I think that this good deal can happen at a good trade location, and this is when price is not overextended. Price is overextended when it has traveled too far, too fast. I think price has to come back a little bit, catch its breath, gather some more strength, and then it's ready for the next leg higher. Here, huge candles to the upside, and then price is coming back. It's resting again in this price equilibrium zone, in our buy zone here, and then it continues higher again. This is why I'm looking for buying opportunities in that zone. Major analysis task for us is always to see what is the trend. And on this chart, we had an uptrend. We saw that price made new higher highs and higher lows. But now just recently, this low here, this is a complete area, is a lower high, is a lower low compared to that low over here. This high is a lower high compared to this one here. Those are, again, lower highs compared to the previous ones. And the low that we just recently made was another lower low. So the trend on the daily chart now has clearly changed to a downtrend. And I only always want to trade in the direction of the trend. So the first thing here, the daily chart is no longer giving me an uptrend. It's no longer in sync with what the weekly chart suggested. And therefore, on my lower time frames, I would also now be looking for potential short trading opportunities. Now, let's also have a look at potential levels that we're seeing here. And I'm using here my horizontal lines. I'm just placing that line on the chart. And I would like to point your attention to round about this level here. What can I see here at that level? Just a second. And on this level, I can see price has reacted to this level here several times. Again, very close encounter there, another close encounter here, and so on. Next touch here, and price has broken below this level here. And once again, it's now coming back to test this level from the downside. I'm just looking with my analysis at highs and lows. This is good enough for me. I don't need any other chart patterns. Maybe some of you guys will recognize this pattern here as a potential shoulder head shoulder pattern. And if we put it like that, you can see you have the left shoulder here, you have the head sitting here, and now you have here the right shoulder. We have just broken now below that that right shoulder. However, I don't have to know and need this pattern because I'm just looking at my highs and lows. And looking at the highs and lows, I know and understand this market now is in a downtrend. So if you're just getting started with your trading, would I recommend that you guys learn those classical chart patterns, triangle formations, double tops, double bottoms? No, I don't think it's worth the effort, because just trying to understand and see what price is doing, what the trend is on that chart, is actually sufficient. The other one is just additional information that isn't really suitable to turn additional profit. Does it make me a better trader? No, it doesn't. Just knowing what the trend is good enough for me. Next thing to notice here is price made a new higher high, but look what our indicators did. MACD here made a lower high. For the next higher high, MACD once again made a lower high. And so we already had here a huge divergence setting up, not only in MACD, but also in RSI. And for that reason, there were early warning signs that this market might not be going higher. Now that we have broken below this level, we can also see that our moving averages have now fallen into the right order. We can see the 10 is below the 20 and the 50, and they are starting to spread out. They are starting to fan out. And this is what we're actually looking for. And we're sitting now just below this level. So what's my game plan here, or potential game plan? Let's be conservative here. I think the trend has changed. I think we have now just broken below a major support level. And this major support level, every time support is broken, it becomes resistance. And sure enough, price pulled back here during the last few days and has tested this level and is testing this level right now here from the downside. So if we're going and dropping down here now to lower time frames, let's have a look at the 4-hour chart. We can see that price is actually pulled back here, is now testing this level. And we can start to see that some kind of additional level might be forming here, for example, at this area here. Clear new lower low also here with MACD and with RSI. And if we drop our time frames even further, let's have a look at the hourly chart. We might be able to see here, and let's just add this horizontal ray here. And let's make that a little bit more, sorry guys, style, a little bit thicker so that it's easier to see. I think price is establishing another new level here. And the problem could be that we are now, I like the setup until that point. Now price is pushing higher again to test this level. We will have to wait and see how much momentum is left here. But my potential trade setup that I would be stalking here over the next few hours could be a breakout here to the downside below this level. And this is then something that might be tradable here to the short side. Crucial for that potential trade setup is what MACD and RSI will be doing at that point in time. I don't want to see any divergence in MACD and RSI when the breakout is about to happen. Right now, this looks rather interesting because if we have a look what MACD did on this test here, we made a low. On the next test, we made a lower low in MACD. So far, MACD is converging. And what I want to see, if price is about to break out here to the downside, I want to see that MACD is able to do also and to create a new lower low here as well. Now you might be telling me, Philip, wait a moment, this is now an uptrend here on the hourly chart. So is this actually a safe trade to take at that stage? The major point for me is that the daily is just sitting below this level, and this level is adding as further confirmation and further support. The daily is in a clear downtrend, and the major trend here on the hourly chart is also to the downside. Yes, recently we have pulled back, but now we are testing this and creating this level. And the major idea here is if something is in motion, it tends to stay in motion. Newton's laws of physics. we think it's the same thing with trading. If there is enough selling momentum in the market, there's a decent chance that the selling might be continuing or might continue. And this is the basic assumption here. Huge selling, retracement, a level being tested, level being formed, and now price could be breaking out to the downside. And at that stage, I want to participate in that potential trade setup here as a short trade. My stop loss location would usually be above the high of that recent swing point move. However, with that level sitting just here, I would place my stop loss definitely above the level there. Now, let's have a look at how this could be potentially traded with a Nadex contract. And I'm looking here at forex spreads. I don't want to use a binary this time because I think this is a very nice opportunity to talk about the spread. Once again, just because I'm showing you this trade now, it's not a suggestion that or a recommendation that you take that trade. It's just part of my analysis, what you want to do in the market. If you could arrive at the conclusion, I'm completely nuts, and you just take the opposite side, would be perfectly fine. I just urge you to have a plan and be consistent with your plan and don't trade from your gut. How you trade, what you trade, that's always and will always be completely your choice. My reasoning here would be that we are trading now in this range, and I assume price might be breaking to the downside. Now, spreads are range products, and this means that this lower spread here, the last one that I'm seeing here, means that my spread here is participating in a range between US dollar 114 to 116.50. And if I want to trade a potential short trade here, I want to enter as close to the ceiling of that spread as possible, because then I have the complete distance of that spread as potential profit opportunity if price starts to drop and hit that level. Now, do I think that price will actually drop to 114 within the remaining 2 hours and 42 minutes until expiry? No, I don't think so. However, I think price might be coming lower, and I want to participate in that move to the downside. And if we see that upper boundary of that spread, that ceiling, it's sitting at 116.50, which is very, very close to what we have here. Now, would it make sense to enter this trade here, the 119? Yes. However, that trade could also go against us. It could be pushing higher, and I'm not entering at the ceiling. Here, I'm very close to my ceiling. Would that trade here make any more sense to me? No, actually it wouldn't. The first one doesn't make sense to me in a short context here at all, because I would be entering at the bottom, which means if price drops below 116.50, I won't be participating in that price movement any longer. So for that reason, if you think price might be going lower, you might be tempted to maybe just pick that contract here. And the nice thing about the Nadex contracts is you always know your risk upfront, which means if I'm selling one contract here, my maximum loss would be 13 bucks. Why 13 bucks? Because we are trading so very, very close to that ceiling level of 116.50. If I'm entering at the ceiling, there is nothing that can really go any further against me from that spread perspective. So my risk is 13 bucks here. I'm now increasing my position size until I'm risking about $200 here. Why $200? Well, in this demo account, and I urge you to try all those products first in your demo account, I have now run about $22,000 available for my trading. If I want to stay consistent with my position sizing, I always want to risk the same amount, the same dollar amount on any one given trade. And I want to risk about 1% of my account, and this is something around $220 here. And so a trade size with 208 perfectly matches that bill. My maximum profit, once again, I cannot lose more than those 208 that I'm paying now to enter the transaction. My maximum profit, however, would be 3,792. When will I get this maximum profit? I only get this profit if the market drops to or below 114 within the next 2 hours and 40 minutes. Once again, I think this is highly unlikely, but I think the market might further push in that direction. So I'm just placing that order, and my order has been rejected. All right, it's a demo account I logged in previously, and if this is not working currently, this is probably because I've logged into that session for too long. But you guys get the basic idea how this trade works. If you think my analysis is completely off and you think this market is poised to go higher, it's testing this level, and after this test it will just shoot to the upside, well, then you probably, once again coming from a spread perspective, you probably want to enter this market here, or you could enter, once again, another recommendation here with this upper contract. Now you're entering at the bottom, at the floor of that spread range, which means if the market drops any further against you, you cannot lose very much more because you're already trading here. And let's have a look at this one here and increase the number. You see, your risk is just $6 for one contract, because you're entering at the floor. If you were to enter a different contract, your risk per contract would be now $119. Why? Because you're entering somewhere in the middle of the range. Once again, if you want to go long a market, I try to find a spread where the current market price is sitting very, very close to the floor of that spread. If I want to short a market, I want to enter that market very, very close with a contract where price is trading very close to the ceiling of that market. That's, in my eyes, the most crucial things to get about spreads. Which one to pick? I want to enter always at the extreme in my favor. All right, guys. So this is how I would potentially trade, or how this setup here could be potentially tradable with Nadex contracts. And now let's also have a look at the other markets. I think US oil, crude oil is currently rather interesting. Let's have a look again at the weekly chart, and let's have a look at WTI. This market has been range bound for quite some time. There have been efforts for price to actually push higher, and you can see that the market tried to create this range here around about $52. People always tell me the market has been in a range of $40 to $50. I don't agree. I think the actual range pretty much was $42 to $52. And we see price broke out here. We tried its best to push higher. It's trying again to push higher here on the weekly chart. And we start to see our fanning pattern that we're looking for. And we see some bullish momentum going on here. We also can see that those recent higher highs in price have been confirmed both in MACD and RSI. We have convergence. So just judging from the weekly chart, looks like crude oil WTI might be going higher. Let's have a look at the daily chart. And on the daily chart, we can see that price is shooting higher. It's creating a new higher high. And we have seen higher lows as well. And let's focus on those candles here for a moment. We can see that the market pushed higher with a large candle, very bullish candle, but now those candles are getting smaller. And not only are they getting smaller, they are also getting more indecisive. This means the body is in the middle of the range and the body is getting smaller. Those candles are getting smaller. And it's something like a topping pattern. It's just imagine, so you take something and throw it in the air. First, it's going up higher and at a pretty fast pace, but then it starts to slow down, because obviously gravity starts to take its toll. At some point in the air, it rests for a split second, and then it starts to accelerate back again towards the earth. And this is pretty much the same thing, at least in my book, what price is doing here. Price has been thrown in the air, and now it's starting to stall up there. It's getting way more indecisive, and just looking at those candles, I think it might be a little bit more likely for price to return now. Where does it return to? It might return here into a moving average buy zone and see that strong level here sitting in that zone. Once again, do I want to enter a potential long trade here now at any cost? No, I don't want to, because I want to have a good deal. I want to have a good trade location. I think I might be getting this in the next few days here in my moving average buy zone, just on top of that level here. And what we also can try to do is, what I always like to do is, using my Fibonacci retracements. I'm drawing in my Fib retracements from the most recent swing point low to the swing point high. And sorry guys. And I can see that this level is quite close to the 61.80% retracement. It's not a perfect match. If those would have clustered sitting perfectly on top, much better indication here, but very close to that level, which is rather significant. And I always like also to draw in once again the Fib retracement from the previous swing point low to the same swing point high. And now I can see that this level here is sitting just between the 38.2 and 50% retracement area. All in all, this adds to the significance of that level here and this area. And if I can get something around this area, 38.2, 61.8, the level, something here, yeah, let's call it just a trade location of something around 52, 50, 52.25, something like that. That might be a good trade location. Once again, it's just my analysis. You might say, wait a minute, we had this breakout here previously as well, and we just came back again. It's always your trade decision. So this is just what I'm seeing on this chart here, and I think there might be an opportunity waiting here for us for our trading over the next few days. So much for WTI. And then I also want to have a brief look here at the S&P 500. Major index, and obviously we are just 2 days ahead of the FOMC meeting, and we think that this will have can potentially have a major impact on those markets. Keep in mind, you don't want to trade those news events with conventional instruments, because with those news events we have a huge probability that we have slippage in the market, that the market will be trading at extremes, and extremes in both directions, at least for a very volatile short period. With Nadex contracts, however, this is not something to really consider. Actually, those events are really good to be traded with Nadex contracts, because your downside is always limited. You know exactly what your risk is when you enter the transaction. And for that reason, it's if I want to trade those environments, I only want to trade them with binaries and with spreads, because I want to have that perfectly risk-defined position on. That just as a background information, considering the upcoming FOMC meeting. What is the S&P 500 doing? Everybody is calling that this market is about at the top and should be cracking down any minute now. And the short sellers are getting crazy because it just won't do so. What can I see on that chart? I always want to look at the chart, and because I think the chart tells me the true story. Obviously, yeah, price is pushing higher. The one thing that I don't like here is price has pulled back here, and this pullback was deeper than the previous pullback. It's all pretty much in range, but just on a technical note, this recent pullback was a lower low. And please also note, the pushes higher are rather small. You have small candles here. But if people think that the market might be coming down, you start to see how easily that fear is starting to drive the bears and makes the bull exit their positions. Same thing with the volatility index, the VIX. It's trading at all-time lows. But however, every time this happens, the VIX definitely spikes up. And I feel it takes very, very little for this market to actually go much lower quite fast. I have a new higher high compared to the previous high. However, this higher high here was a lower high in MACD and also a lower high in RSI. So I have divergence with this small move here, with this recent high and this higher high. We also, it's not clear divergence, it's pretty much sideways here. Same thing is true for RSI. It's a bullish market. I think it remains a bullish market, but there's a huge potential here to the downside. And I would stay cautious. Myself, I'm very cautious with initiating any long positions at that point. but people have telling you on the other hand that this market is bound to fall since pretty much since last November, and let's just see what the market has been doing since then. So the question is, do you want to trade what everybody's telling you and what your gut tells you? My gut tells me this market will be going lower. Or do you trade what you see in the chart, what is objective, and just take good care about your risk management and position sizing, which is always key and crucial, but gladly, which is so easy to be done here on the Nadex platform. All right, guys, that's my current assessment of those markets. Let's just quickly jump back here to our slides. Yeah, one quick correction while you look at that stack. It still says 14 days demo accounts are available. That information definitely is outdated. Those demo accounts are now available without time limit. And I strongly suggest that you use those demo accounts, get yourself familiar and acquainted with the platform, with the products, have a look around, and just get used to trading the markets with binaries and spreads. From me, that's it for today. I hope you enjoyed today's session and that you did find it useful. And yeah, please sign up for our other Nadex webinars as well. And as always, after this webinar, there should be a short survey. Any feedback is appreciated. We're running those sessions for you. I also promise to have better English skills next time. And yeah, any feedback is appreciated. We want to give you the content that you came here for in the first place. Kath, Paula, thank you very much for your feedback. Really appreciate it. Always, yeah, it always makes me happy.